Hi everyone, I'm Cheng, and you guys can call me Cheng. So I'm the trainer for Dr. Wells, Saas Hypergrowth Investing. Okay, so today we have some questions from viewers, and I'll try to answer all these questions as best as I can. Okay, so this is the first question. Okay, wow, first question. What is your favorite stock as of now? Okay, for me, my favorite stock as of now is CrowdStrike. It is a security company that protects all your endpoints, your computers, your data servers, all your data, all your endpoints. All right. So why do I like this stock? Is because it will still continue to grow very well, and it is a company that is born and bred in the cloud. It is very light agent, very good architecture that they have. So yeah, why not? It's a very good stock and it will grow very well. Okay, next one. Okay, how would you advise a seasoned investor? So for me, when I consider a seasoned investor, they will be already invested in the markets for like 3 years, 5 years, more than 3 years. So for me, for a typical seasoned investor, it really depends on what is your goal. If you're going for very safe, or the stock that you consider safe, not much volatility, you can go for Singapore stocks. If you want higher growth, all right, which you need to study more, all right, doesn't mean it's more risky. It's just that you'll be more volatile. To me, volatility is not risk. So of course, as an investor, you want a higher growth, you want a better risk reward. All right. So if you have a lot more understanding for that stock, you have more conviction, of course, you go for that one that can grow faster. Okay. Yep. Let's see. Next question. Starting capital to take you where you are today. For me, I started off with $5,000, $6,000. It's all my ang pao money. I started when I was 21 years old. All right, that was in 2007. And I only bought 2 stocks. And of course, these 2 stocks doubled very quickly. And because I wanted to grow my capital very fast. And at the same time, because you're young, you can really take more risk. All right, and you want to really compound your portfolio a lot faster. All right, and yeah, basically you can start with any amount of dollars that you want to. $500 will be good, and as you continue to grow, you add in more money. So you have a portfolio of stock whereby you add in money, you continue to grow it, add more money and continue to grow it, and don't touch that portfolio. Don't take out that capital. Let it continue to compound and grow. And then in no time, you will see that wow, you have quite a significant amount of portfolio whereby you'll be very happy, very satisfied. All right. Okay, which market do you focus on? For me, I used to focus on the Singapore markets, but if you look at the Singapore market, most of them are not very high growth, whereby the total addressable market is smaller unless they are a big global company. But if you are a big global company, you don't want to be listed in Singapore. We take C Group, for example. All right, it is a global company. It has very, very good business. All right, and it is listed in the US. And many good companies want to be listed in the US, either US or Hong Kong. All right, for me, because my Mandarin may not be so good, in order to read the Mandarin financial statements, so I chose the US market. And US markets have a lot of companies. I think 5,000 to 7,000 over companies if you include those on the over-the-counter markets, OTC markets. All right, so there are many for you to choose, and you'll really be spoiled for choice. And for me, this will give the investor a better return. Next question. What are some of the online resources you read daily? For me, I read a lot every day. I'm a devourer of a lot of information. I read everything. I read books, online, PDF. There are a lot of free resources. I read Seeking Alpha. I even read Hardware Zone. Why not? All right, and of course there are a lot of financial bloggers out there. There's Twitter, there's like YouTube videos. There are even like online subscriptions that you can subscribe from, and those are from very good analysts. So these are some of them that I read, and this is where I get all my investment ideas and information. All right. Next question. How would you advise a beginner to begin? Okay, the number one advice is you must start early. All right, because you are young, or you can be slightly older. All right, time is your friend. Basically, you want compounding to work for you. All right. So you hear of people saying it's not about timing the market, it's about time in the market, right? Every day, every week, or there will always be opportunities in the market whereby you can buy a decent stock at a fair value that can grow very well and to compound your wealth for you. All right. Every time there will always be opportunities in the market. All right. So first thing first is you need to know how to do it. You need to know how to analyze the companies. You need to pick how are you going to compound and to build your wealth. Is it from real estate? Is it from equities? All right. Is it using technical analysis? Is it using fundamental analysis? You have to choose early and stick to it. And the most important thing is focus. All right. If you want to play the game well, you need to know where is your edge. All right. If you don't know where is your edge, you will be lost like everybody else. And if you are quite lost, you are following the crowds, most likely you will get below average returns or at most average returns. All right. So as an investor, you want to know where is your edge. All right. Okay. What is your view on Palantir? Okay. I like this stock. I own this stock. All right. At the current price, I don't find that it is attractive enough. Okay. So why do I like the stock? It started off many years ago, 17 years ago. It was built with a vision in mind to help governments, especially so for US governments and their allied countries, right? The G7, right? And they have a very amazing platform whereby they really try to integrate every data that they have in terms of defense, in terms of operations, to help governments really understand data and to help them to really provide better defense for their own citizens, right? In a time where Silicon Valley or some of these tech companies are abandoning government, whereby governments provide a public good for citizens, and especially so because government is also like a big entity, and they need all these advanced data analytics software to perform their job better. I find that this is important. And of course, Palantir is growing well at 30-40%. And they are aiming for 5 billion revenues by 2024, all right, or 2025. And I think that it will still continue to grow well. You can look at Palantir, whereby they have their Gotham, which is made for governments. They have their Foundry, which is made for commercial companies. All right, and in this sector, it is still growing very well. And at the same time, Palantir, you talk about the data lake, right? They can integrate all the disparate data that to help these companies, all right, to perform better, to manage resources better, all right, and they integrate it with the Apollo platform, and it's quite amazing. Although investors don't know what is really so powerful of their platform, but the thing is they can't reveal so many secrets, right? Okay, so I find it still very interesting, quite amazing, all right, to be invested in this company whereby the vision is to be the best and the most important software in the world. And I do agree with what Alex Karp is his vision with Palantir and the world, all right, is to create a more equal world, a safer society for everyone. Okay, next. Do you time the market? No, I don't. All right, for me, time in the market is important. like I mentioned earlier, there are many opportunities in the market. All right. At one point, some companies, there are some good companies can be overvalued. Then of course you skip them. And at one point, some companies can be undervalued. And if these are the companies that you are looking at and you have some spare cash to buy, you just buy it. I don't really time the market. And so far, it has been working well for me for the past 14 years. All right. So basically, it is your so-called timing is based on valuation. And your age is, valuation. You want to know information, you want to know a lot more information than the average investors. If you were to know about this company, you have more knowledge, more than 90% of investors out there, that is your age. And if the price drops, you can buy more, right? You don't panic. And if the price goes up, you're happy because your net worth goes up, all right? And what are the risks of my investment strategy? For me, risk is what you do not understand, right? I have the same investment philosophy as Warren Buffett. Risk is what you do not understand. And of course, if you were to drive a car or drive a plane, pilot a plane and you don't have a license for it, of course it will be risky. But for investments, if you know more information than 90% or 80% of the investors out there, your risk is a lot lower. You know the value that you are buying and you know what is the potential that you'll be able to reach. Of course, number one, you want to minimize your loss, right? The more you know about this company, the more you can take care of your downside. And if you take care of your downside, the upside, let the rest take care of you. Let the rest take care for you, right? Let the market take care for you on the upside, all right? Okay, last question. How much do you think you need to retire? All right, it's really different for everyone. Like it depends on what kind of lifestyle you enjoy. Some people enjoy a very frugal lifestyle. You don't need this expensive watch or this Michelin star meal. All right, so it's really up to the individual. Okay, for me, if I can achieve like a 10K or 20K kind of per month kind of a returns, right? In terms of my drawdown on my capital, I think that would be very nice. Okay. And yeah, but provided it really depends on the size of your portfolio. The bigger the size, the better your drawdown, the better your compounding. So take for example, imagine if you have a 100,000 portfolio, a 10% return is only $10,000. All right. If you have a 10 million portfolio, there will be a lot more. So it really depends on the size of your portfolio. That's why I am very focused in building a bigger portfolio, a big portfolio that will be significant. All right. And for me, it is at the same time, it is a fun game, and I hope everyone enjoy the Q&A session. Thank you very much. Bye bye.